Well, on a Monday at this particular time segment here, I'd like to check in with Brian Splitt of Allendale Incorporated and get his thoughts on our market activity. And we bring Brian on right now. Brian, thanks for joining us. Hope you had a great holiday weekend with the family.
I did, Marlon. How are you today?
I'm doing fine. Thank you very much. Let's dive into this grain trade here first on this segment here and explain what we're looking at here, where we have the corn under pressure, we have the soybeans firming up a little bit today, and wheat making apparent new contract lows here. Pick one of these out here and tell us what you're seeing happening in the market action.
Well, it's Cyber Monday, so they've got electronic corn and electronic wheat on sale. That's it, right?
Ah, okay. I never made that connection. Good
no,
point.
It seems like right now we're back to the theme of last week. Beans and meal have been bid, and they've been selling bean oil and wheat. It looks like there was a tender over the weekend here, so we've got very low offer prices from Australian wheat on the Iraqi tender, and that's probably one of the fundamental drivers here. But there's really nothing on the chart right now that's telling the funds to, ease up on the selling for corn or wheat. And at the same time, the bean chart, continues to hold support. We've got an outside day higher right now on both soybean futures and meal futures. And any type of rally that you see in soybeans or the complex that's led by meal seems to be a stronger rally. I know the trade's concerned about potential dryness in Argentina. They're a very heavy processing country, so any concerns in Argentina is going to lead to strong buying in meal. I would like to point out that March meal did go up and hit some very good resistance at 335. So we do potentially have a double top there with the October monthly high. A poor close here could signal that we may have reached a temporary high and need to go back down and revisit some support there.
Brian, on the corn, it looks like we could have pretty much wide open harvest weather this week to kind of wrap up the corn harvest. We get our last harvest progress update this afternoon from USDA. That'll record harvest progress as of yesterday, of course, and then that's it. So everybody's on their own after that. Some analysts had said that they expect with all that cleanup harvest activity in the corn, that's going to keep a little pressure on there for at least a couple of days.
Well, and I think the other part of it, too, is we did have options expire on Friday. Mm-hmm. And if you go back to a year ago, we've been actually tracking year-ago levels very closely. Last week's low, I should say the low 2 weeks ago in D's corn was 336 and a quarter. The same low a year ago was 335 and a half. Last week we had that run up in option expiration just like a year ago. So now what happens once the options are expired on the cash market side of things, you're going to have any basis contract that does not have a futures price attached to it that has to get priced before first notice. So I think there's some natural sellers in the market right now, and I believe that after the bounce off of the contract lows that were made, those natural sellers use that 10-cent bounce as an opportunity to get some short-term pricing done.
Right now, December corn down 1 3/4 at 340 and a half, so we're within 2 ticks of our low of the day today. Let's look at the soybean market right now. In soybeans, we have January 5 higher at 998 and a quarter. They got as high as 1001 and a half earlier this morning. Kind of backed under that $10 benchmark again for the time being. July up 4 3/4. On the wheat market in Chicago, we've been watching December, which is down 4 3/4 at 411 per bushel. Kansas City wheat has December now trading at 410. That's down 4.5 per bushel. Minneapolis spring wheat trade has December down 5.5 at 618, and that's 6 cents under its high from the overnight hours. And if you look at the cotton market right now, you have your March contract down 3 points at 71.90. It had been over 72 cents. We'll come back in just a moment, and we'll talk more with Brian Splitt of Allendale. We'll get his thoughts on the livestock trade on the other side. Brian Splitt is with Allendale Incorporated in McHenry, Illinois. He joins us right now. Livestock trade, let's take a look at the cattle market, which opened under a little bit of pressure this morning. It didn't know for sure which way to go. It was about 8 to 10 cents lower. And then now we have the December live cattle $1 higher at $119.58. So we're now $1.20 off of our earlier lows this morning and within 15-20 cents of our high of the day. Right now, February is trading $1.07 higher at $125.65 per hundredweight. On the feeder cattle market, we have the January contract quoted at $154.12. That is up 82 cents, and we have the March 27 higher at $152.05. So a firmer tone here all across the cattle complex after a rather tentative start here. Underlying this market here, Brian, the cash market last week, it seemed like it was kind of steady with the week before, but then as it wore on toward the end of the actual cash buying, it seemed like it kind of firmed up just a little bit toward the end of the week, didn't it?
Yeah, a little bit there. And, technically last week we talked about how the top step, February, which is where the volume in the open interest lies now, we did close below the long-term uptrend that we've seen since late August, and how important it was to reassert ourselves above that uptrend to see additional technical buying. Well, it looks like we've done that. I think the next step right now is to take out last week's highs, and we're sitting about 10 points off of last week's highs on this Feb cattle. So if we can push through 126, I would expect to see some more technical buying there, some short covering, and it looks like if that's the case, we may very well be able to maintain this uptrend here as December goes into the expiration of the contract over the course of the next month.
All right, now I want to talk with you about the lean hog trade here. On the lean hog futures, they chopped around for a better part of a week in some really wide trading ranges. But then they gapped higher on Friday, and now we're higher again. And so far, they have not taken out that gap. They have not closed it yet from, that holiday break there. We have December lean hogs 93 higher at 64.18, and now you have February half $1 higher at 69.90 per hundredweight. They're kind of in the middle of the trading range here today, but how healthy is this lean hog market overall, in your opinion?
Well, we've got some good demand here, and like you mentioned, the gap is still in place. This February contract took its time mid-month, testing the 100 and 200-day moving averages, held those over the course of about 3 to 4 days. And it looks like right now, we're not overbought. We have the gap in place, so it does appear that technically there's still some more upside potential here. We've seen the December contract catch back up to the index, and now it's back over the index. So I think it could build a little bit of distance between the index here over the next few days. And I'm not going to be a seller of these hogs quite yet until we can maybe possibly retest some of these highs that were made early in the month of November.
Brian, and then it'll be interesting to see if the end of the month has any impact here on the livestock trade as well. I appreciate the comments here, sir. Brian Splitt of Allendale Incorporated in McHenry, Illinois. And Christina, I did want to point out one thing I noticed walking into the studio. The export inspections normally come out at the top of the hour, and we had a news item on the wire that said they have been delayed due to technical difficulties.
We could see those cutouts delayed as well.
Turkey delay, maybe.
All right, thank you so much, Markets Editor Marlon Bowling.